Let's see. Actually, let me go up here real quick.
From future stars to all stars.
Been using my my Windows computer to trade with. I use my Mac computer to do these webinars with.
Okay.
Using this AV Trader. I don't know. I'm starting not to like FBI anymore. I might switch to Talnex completely. Because like while I'm trading, it crashes a lot. Like it's always disconnected. You had that problem?
I hardly ever use it on my computer, man. When I'm looking at my computer, I'm trading off my phone still.
Right. And that's what I do, man. I trade off my phone. Like, you know, I'm trying to get in the habit of trading off the computer.
Yeah.
So I get back in the habit of doing that. So, it's so hard when like, the program will be disconnected, but my phone is still connected. So, yeah. That rise. Why not draw a line from right here? Understand the importance of these lines, boy.
Hell.
Look at the 4 hour. Lines everywhere. Are you FaceTiming?
Yeah, somebody was FaceTiming, trying to figure out what it is. Who was this? Sandra, what do you want?
I ain't call you.
Yeah, you did.
Call you earlier.
Earlier.
Yeah, but you.
You must have butt dialed you.
Oh, nah, I just got it to come through. Because it keep kicking my...
Can you see me?
Yeah, I see you.
Can you see me?
Yeah, I see you.
How you see me?
Could you FaceTime? Clinton,
Yo,
what's good?
what's good, man?
I just need 10 racks. Hit me up.
Shit, man, I'm trying to get 10.
Hey, man, you know. Kevin, what's up, bro? I see you out there, Kev.
What's going on?
I need I need to get some more ice cream money, man. It's hot outside.
Hey, let's you the money, man.
Some ice cream money.
You hear me?
You said what?
I said you the money, man.
Man, you know, I'm just living. That's it.
Huh?
I said I'm just living. That's it, man.
Yeah, you right.
You know what I'm saying? Stack or starve, trade or starve. You know,
Yeah, I understand completely.
get the bread or shut up.
You right about that.
But yeah, let me show y'all something real quick. So I got you guys on right now.
Brandon need to get some service, man.
You said what?
Brandon need to get some service.
You said Brandon.
Yeah, he keep this joint keep kicking them off.
Oh yeah, yeah.
Still on that 2G.
Using all his data, you know, tethering to his computer, trading every day. You run out of data quick.
Yeah.
All right, so this. I'm gonna show you all a quick example of this. I'm gonna make sure everybody gets this. So I'm gonna show this example with 3 lines. I'm gonna show 3 lines right here. If anybody else get on, I'm gonna show it again. I'm gonna keep showing it till everybody get it. Actually, let me double click that. All right, go to the properties of this. What I want to do is change the color. I'm gonna change this to green. Change this to a dotted line. Okay. All right. Change this one. Make that blue. Make this one. Oh, sorry. That one is red. Difference in the lines. Sorry, I need 4 lines. Make sure I hit the right one. Make this one white. Snow, same thing, right? We'll take it. We'll make it snow. All right, there we go. Now, let me see who's going on.
Wake up!
What up? What up? Who that? Kev? What up, Kev?
What's going on?
What's going on, man?
Chilling.
Fighting, man.
Nah, the dentist.
The dentist. Oh, you didn't tell me you had the teeth pulled and everything, bro. I feel you. All right, so I want y'all to get this since y'all are on here. We're not gonna wait. All right, this white line represents the market live. This is a live market line right here. Okay, when you enter a trade on your computer, you're gonna see a green dotted line. Now, of course, the market's closed, so I can't show you in real time. But I did this earlier. I thought it'd be a good way to kind of show people how to set stop losses, take profits, stuff like that. Okay, so now what's going to happen is I'm pull this red line right here. I'm pull this blue line right here, and I'm leave the white line right there. Okay. Now I want you to imagine that all 4 of these lines are all together as one. The only one that exists that you can see is this green line, because you just entered your trade. That's the green line, and the white line is the market in real time. Do y'all follow me so far, guys?
Mm-hmm.
Okay. So now what happens is once you place your trade, it'll show up a green line. When you click the green line, just click it with your mouse, you drag it up. Okay, let's say, first of all, we're doing a sale. Okay, we're doing a sale, so we want to set a stop loss above, not below. Do y'all follow that part?
Yeah.
Okay. So when you click on the dotted line and you drag it, this red bar will automatically pop up on the screen. Okay? And you can move it where you want to move it. This is how you set your stop loss. Okay? Now, on the left-hand side of the screen, you see that white dot on the left-hand side of the screen right here on the red line, the white dot to the left?
Yeah.
Right there, it'll say SL, which stands for stop loss. You follow me? You can't see right now because we're not live. I'm just trying to paint a picture for you, okay? It'll say stop loss near that white dot. And then beside the SL, it'll have a number. And that number will tell you, how many pips you're setting your stop loss for. Of course, we're going to do 25. You might have to do 30 depending on, which broker you have. But you can see it. So you can measure it. Let's say this right here is 30 pips, okay? And we let it go. When you let it go, that'll be where your stop loss is. You guys follow me so far?
Yeah.
Mm-hmm.
All right. Now you're already into the market. This is where the market is going right now. This is where the market is moving in real time. Okay, it's just moving around like that. All right. But we want to set a stop profit, set a take profit as well. What you got to do is click the green line again. Instead of dragging up, you're going to drag down. Okay. I'm using this as the blue line. All right. So when you drag down to the left side of the screen, you're going to see TP, where that white dot is, which is take profit. All right. Let's say you set your take profit at let's say you set it at 100 pips for an example. Okay. So this right here between, I'm actually going to click on it right here. This right here is your potential loss. This is your potential profit. You follow me?
Yeah.
Yep.
All right. So your loss, you could lose money, yes, real small amount. But look how great your profit could be. Y'all follow me?
Yep.
Yeah.
All right. Now, this is from you working from the computer. All right? If you're on the computer, you don't really have to wait till 50 pips. Okay? You can close it out at 25 if you want. Do it from your phone too. But the whole point of trading from your computer is that you're able to be more agile. You can be quicker. If you're trading from your phone, and you're not at home, most of the time you're going to be working your job or whatever. You don't really have time to try to fuss with all these little take profits and stop loss. When you get to 50 pips, you just close your trade out. But on your computer, you might set your take profit at 100 pips, for an example, and you might let this go ahead and move into profits. Let me show you right here in real time. Okay, so now the market's moving down. Okay, and it bounces around. So the market does, it bounces up and down all the time. Okay. But it's still moving down, all right? But now that it's moved down far enough, you can take your stop loss and move that into the profit. Past the green line, it means in profit. So if the market does come back up, at least it doesn't make you lose money. Do y'all follow that part?
Yeah,
Mhm.
I got it.
Okay. So what you can do is actually, play third base and home. Think about a baseball game, okay? You got somebody running towards home, all right? Now, somebody threw it from the outfield up into the home baseman, okay? So the home baseman has the ball, right? And the third baseman, he's running back to third base. So he throws to the third baseman. And the guy turns around, and then he throws it back to the home base guy. Okay, now I don't play sports, so keep in mind, I'm trying to give you a quick sports analogy, all right? So right now we're playing a game, all right? This is the man right here running the market, okay? You got him trapped, all right? This right here is third base. This right here is home, all right? So what you're trying to do is you're trying to maximize your profit. So what you can do is as the market moves down here, you may move this up some more so you can get more profit there. So if it does go back, you still make money. You still tag them out. Your trade is closed out. You still made money, okay? But now let's say this starts going down to your take profit, and you think it's going to keep going down some more. Well, look, move your take profit down some more. You see what I'm saying? And then you can move this down some more. So it's like you're playing back and forth, trying to, maximize your profits. Does that make sense?
Yeah, that makes sense.
All right. So every trade we do is not going to be 100% winning trade. It's not going to happen. It may come up here and hit this stop loss, okay? What it doesn't mean, though, it doesn't mean that the trade we called was invalid. It just may mean that we just entered at the wrong time. All right? Because what will happen on a trade sometimes is it'll dip down, okay? Like, you know, it'll dip down, and it'll close, you know, below one of our levels. Let me draw that right now, okay? Let's say this right here was a level right here. Okay, let me change that color because I don't want to confuse anybody. I like to make it clear. All right, so this right here is a level, okay? And the market comes back down past this level, so everything is going to be a sell, okay? And it closes below that level, all right, with 2 candles, but then it reverses and goes back up. And here's your stop loss, bam. Now, you're out the trade now. So now it's all the way up here because I already hit your stop loss right here, just red. You're out the trade. But it doesn't mean that the trade that we called wasn't a good trade. It just means that we just got in at the wrong time. It faked us out, but it's still going down. So if you're watching this chart, sometimes we may not call it as soon as it does it again. It just may be a fact of you have to look at the market and see, okay, why did they call this trade? Let me look at why. All right, so it's up here near the high of the day. So this is where the high is right here. You see how it dropped all the way down like this? All right, so it may have just not been the right timing. We might have got in like right here where this little dip is right here. It might have dropped down right here and then just bounce back up and hit your stop loss. But then see, it bounces around and still keeps going down some more. So we could have got in at the wrong time. It doesn't mean that the trade itself is wrong. That's why we tell y'all to set a 25 pip stop loss. The reason for that is so that you don't lose a lot of money. And you're not driving yourself crazy. Because when you see stuff going to negative, you start being like, oh my God, what's going on? You got to worry about it. It's going to hit your stop loss and you just be out. Okay? Because if not, you'll let it just keep going. It'll just keep doing this. It'll keep doing this, this, and now you're down in your account 30%. And you're fussing the group talking about some, man, y'all called a bad trade. We talking about, we said 25 pip stop loss. Well, nobody told me that. That's every trade. Every trade we do is 25 pip stop loss, unless it's near the high of the day. This is the high of the day right here. This is the high of that day. So if we enter right here at this point, you're going to put your stop loss up here. Now, that's a whole lot more than 25 pips. But we're confident that it's not going to break this point. It may come up and put you in the negative a little bit. You might be scared. You might be sitting about to swallow your spit and, you know, swallow some golf balls and you're mad. But then next thing you know, it just drops down next hour. It just goes down like crazy. And you're like, man, I'm in profit. Now you happy. But the whole time it's floating around here, you up here about to throw up. Or you go ahead and close the trade out. You say, man, shoot, I can't take and close my trade out. And then the whole bottom just drops out or something like that. And now you're in profit. That happens.
Yeah.
That happens. But we're definitely going to call more wins than we're going to call losses. If you haven't noticed. You know, from everybody's results.
Yeah.
Okay? Anybody have a question about that? Did I give it a good analogy? Did it make sense to you?
Yeah, that makes sense.
Okay.
Yeah.
All right, but when you enter a trade on your screen, you will see this green dotted line go right across your screen. That'll show you exactly where you entered your trade at. All you gotta do, take your mouse, click on it, drag down, instead of take profit, drag up, instead of stop loss. Only if you're selling. If you're buying, you gotta drag down, do a stop loss, and drag up to do a take profit. Okay, you got that?
Yep.
Yep.
All right. Now we kind of coined our own phrase. We call it a stop profit. Because once you move your stop loss into the profit, it becomes a stop profit. So you hear us say stop profit, you know what we're talking about. I want you to be like, what are they talking about? I never heard that term before. I didn't learn that in Baby Pips. It's not in Baby Pips. We just created that. Okay? Stop profit. All right? Any questions about that?
Nope.
Nope? Okay. All right. So another thing I want you to see here is this is like a scrap sheet of paper. Even though this is how you make money, the money doesn't really come from the chart itself. Okay, the money goes into your trading account. All right, so you're not really, messing up anything by marking your chart up. I need you to mark the hell out of this chart. All right, and don't be afraid to do it. Okay, put lines through it, draw your levels through it, and make it look freaking crazy like this. Make it look crazy. Make it look like, man, it just look like what in the hell is going on in your chart. All right, nothing wrong with making your chart look crazy. That just means you're doing work. All right. Now, amongst all this craziness, what do you see? Do you see it bouncing off my craziness?
Oh yeah.
You see those bounces, right? That's money.
All over. Bouncing all over.
Bouncing all over, right? That's money. That's money. So you got to be, if you want to change the colors, make your trend lines, double click on them. Trend line properties, go in here, make that thing, hot pink if you want. I don't care. You know what I'm saying? Make it pop. Make it exciting. When I look at this market, I get excited. When Alfred wants to do a webinar or something, he wants to look at the charts, I'm excited. Like, man, pull these charts up, bro. Let's talk about this money we're going to make next week. If y'all didn't get on, it's going to be me and him talking about this money we're going to make next week. Because we trying to kill GU, UJ, EG, AU, and AJ. Those are what we're going to attack next week. We're going to kill. Why? Because we're doing our homework. So don't be afraid to mark your chart up. All right? If you see reversal pattern, come up here. Go to Insert. Go to Text. All right? Right here in your text, I'm going to click it for right here. All right? In the middle says Text. I want to write that. You write that, mark your chart. I'm going to say railroad. Okay? Make it yellow. Make it a little bit. Yeah, that 12 is good. Okay? Railroad track. Double click on it. I can move it. There's a railroad track right there. Don't be afraid to draw on your chart. It's your chart. If you're studying the reversal pattern sheet, you might go up there and write different reversal. You might write dark cloud cover, or you might write, three wise men or something like that when you're writing your reversal patterns. I don't write any of those personally. I just know what they look like. I only know people kept calling out names. I don't know what the names of them are. I just know what they look like. I'm like, oh yeah, okay, cool. I look at it and I trade it based on just seeing a reversal pattern. You might see an engulfing candle. You know what I'm saying? You might just call that big ass candle. I don't care. As long as you know what it is, it'll make you some money. This right here, see this engulfing candle, right? This is engulfing candle right here. That big ass candle. You might just call it big ass candle reversal pattern. Whatever you need to do to make you see the trade, whatever makes you money, do that. Look right here. This is the M formation right here. Look at this. 1, 2 legs, third leg. All right. It does break this point with one candle. That's why we try to wait for 2 candle breaks for confirmation on the on that uptrend right there. Then next thing you know, it reverses, comes right back down. Shift the whole entire zone right there. And how many pips is that? I just want to know. 50 pips. Another thing. This is how you measure. This is your measuring stick. Okay? It's right here. It's called crosshair. You see that? You can also click the middle button on your mouse to bring it up too. We learned that from Yadamin in the group. I didn't know that until he said it. Okay? So when you're measuring, the number in the middle is how many pips it is. Y'all see it says 182? Y'all see that?
Yeah, I see it. 182.
Okay. That's how many pips it is from this point to where it is right now. 182 pips. The first number is how many candles it's over in the other direction. This right here, from right here where I clicked on that to over here is 44 candles. 44 candles times 15 minutes. You might want to measure that. I don't know. That's why it's there. Okay? Y'all follow me?
Yep.
Get used to clicking these buttons. Don't be afraid to click every button just to see what the hell it does. Get comfortable. I'm being real now. Just get comfortable just clicking the button. All right? Next thing, save your profile. Save it. All right? So if I come up here and I go to, don't go right here, sorry. Make that clear. Don't come up the file and hit save as right here. That'll mess you up. Go to profiles, come down into profiles. Okay, like you see right here, it says my charts are the bomb. That's my profile. Okay? So if I hit save as, I can hit the down button. It'll tell me where to save it. Say that my charts are the bomb. I hit OK. Override it. Yes, I want to override it. And now this is saved in there. So if my computer crashes or whatever, or it cuts off by itself, all the lines are gone.
Right. When you do that, they will automatically be on the live chart, right?
Say that one more time.
I said all those lines.
All the lines I draw right now, they're going to be on the live chart when it comes live when I'm trading. As long as I pull up this profile, it'll be there.
Okay. All right.
Okay. So even though the market's closed right now, it's going to be there when it opens because I saved it. Okay. You got that?
Yeah.
All right. Now, what you also need to pay attention to is make sure I got it.
Good as more.
All right. So what you'll get, what you need to get is your terminal. If you don't see your terminal when you first open up your chart, if you come up here to the view button, you scroll down to terminal, it'll show you where your trades are. Make sure it's on the trade screen. Because anytime you enter a trade, it's going to pop up down here at this bottom level. It'll show you the time you got in on the trade, type of trade, size of the trade you got in on it, what trade currency you got on, the price you entered at, your stop loss, your take profit, the price is currently at, the commission you have to pay on the trade. If you hold it for more than 1 day, it'll show you the swap pay. Because you got to pay a swap if you hold it for more than 1 day. And days happen from 5 p.m. to 5 p.m. That's how days run East Standard Time. It's 5 to 5. All right?
Hey, Jay.
Profit or loss over here in this corner.
Oh, yeah.
All right? So you'll see that when you're trading live. There'll be an X button beside your trade. If you hit the X button, that'll close your trade out. So it'll be a one-click thing, and you can be out the trade.
Hey, Jay.
Yes.
Hey, when I'm in my I'm in my demo account doing that, don't none of that come up. Like my commission, my stop loss.
Okay.
None of that stuff comes up.
You have to set your stop loss. Remember, I just showed you how to set a stop loss. It doesn't come up there automatically. You have to put a stop loss.
Hey, I tried to put a stop loss, but for some reason it won't come up. Like I mean, it will come up, but it won't stay.
What's your spread?
You like you drag it and it doesn't show up.
Nah, what he's saying is he drags it and it shows up, but his spread depends on whatever pair he's on. You know, if you're still on a demo account, you know, I think you have to do more than like 75 pips, I think.
Yeah, on a demo account, you got to make it bigger than normal.
Okay.
Because it's not real money. But they have separate rules, and you also have to set it when you're setting it. All right, every currency has a spread it has to cover.
Yeah.
So you can't put it right there where the spread is either. Because it might be like a 7-point, 10-point, 50-point spread. You can drop a stop loss right there at that spread.
Okay, I got it now. I got it.
Okay.
I got it.
But like I said, when you're trading live, you'll see it. Now another thing, when you enter a new order,
I don't take bricks at all.
okay. I'm about to migrate, babe, so you can hear.
The whole 4 rows, I want straight through it.
Okay. But yeah, this right here, you can set it right here live. You can actually come up here and see it. You see right here, if we're doing a buy, and I want to go ahead and put a stop loss down here. Let's say, see, it's at 841. The spread on here right now is what, Alfred? I can't see it right now. You know the spread is on this? On GA?
No, I'm not sure.
Okay, let's say it's 50. All right. Well, let's say see, it's 41. Go down. Okay. So that's our. See, this right here is 50 pips right here. That's the spread right there. Okay. So that's the spread. So you got to put it below that. So let's say I put it like my stop loss right there. So I'm going on the buy right now. This is where the market is currently. This is my stop loss. All right. You can also come over here and set a take profit. You can hit this button. This is the slow way. You can also just look on the right-hand side and see where you want to, put your take profit at, and just type it in as well. So if I want to type in, let's see, 2.13420. Okay. So I have that. My stop loss set, take profit set, and market execution just means you're going to do it right now. Okay. So I'm going to hit that buy. Bam. We're in the market. Now, make sure you pay attention to this up here at the top. Just because you're looking at a certain currency doesn't mean it's going to be up here at the top. Sometimes it's not.
Yeah.
So make sure it does say GBP AUD if you're trading GBP AUD. Because you don't want to be doing a buy on something that's going down. And you're in the wrong trap. I've done it a couple of times and lost money and made money. doing the wrong, doing the wrong chart. But you want to do the right chart, okay? All right, so you hit buy or sell. All right, next question is going to be pending orders. All right, pending orders. I do buy stops, sell stops. I don't do sell them and buy limits, okay? Because I don't want anything to bounce off twice for me to trade it. I just go ahead and do a buy stop and sell stop. What that means is, let me show you here real quick. Let's say right now, you see the market where it is right now, right? And let's say it's in between these two levels. See these two red lines I'm pointing to?
That's funny because I was in there and then I was like,
You hear me?
Mm-hmm.
Yeah.
Okay. So it's right here. It's bounced in between like these levels right here. This one and this one up here. All right? So what I'm trying to figure out is it going to go on an up or down trend? See, right now it's kind of moving sideways. All right. So what I may do is I may set a
I was looking down like
pending order for a sell limit. This is my sell limit. So if it breaks out of this zone and goes down, it'll hit my sell limit, and it'll keep going down. I can make some more profit. But I can also make a buy limit right here. Okay. So if it comes up
and then he was like, no, you're good.
hits that buy limit, I can go into profit. But I'm not in the market right now, so it doesn't activate it until the market touches that price or touches this price. Does that make sense?
Yeah.
Okay. So you're just setting. This is a pending order. That means it's not activated until the market price hits it.
And it was the wrong break.
I got that.
Yeah, I got that.
Any questions?
I want it exactly like that. Like, yeah, I want it exactly like that. He was like, okay, I'm gonna spell break for the right way for you. He was like, oh snap.
Any questions at all about the program, about the system? Have y'all watched the TLC videos?
Yeah, I watched it. I watched some. The latest ones I haven't been had a chance to watch.
Okay, that's fine. But you watched something.
Yeah.
You ain't been
Two or
just.
three things.
That's all I care about. Okay, just going through and getting it because it's based on your time. And people who say they don't get it yet, it's usually because they're not doing anything to get it. You just can't magically just get on it, get in the market and just make money every time. You don't know what you're doing. You'll lose money very fast. So that's why it's very, very important to enter a trade and set a stop loss.
Hey, what do you?
That's important as a stop loss.
Hey, what do you mean when you guys say scalping? What is that?
Scalping. Good question. Good question, brother. All right, this is the 1 minute chart. Okay. And we're scalping based on a 1 minute chart. All right. So right here, okay, you see the market. Let's say the market. Let me get a good candle. This candle right here, right? This big candle right here. That's 72 pips. Okay. That doesn't include your spread though. Your spread on this chart is like 50.
Yeah.
So that will only be 20 points in the profit. That's a scalp. We're not trying to get 50 points. We're trying to get 1 to 20. If we get more, great. Okay? So that's scalping. So you might get in and get out within, 5 or 6 minutes. Here's a good example right here. All right? So the market, goes up right here, consolidates, make a little reversal pattern, so railroad chart right there, reversal pattern right there. And let's say we enter right there at that reversal pattern. Okay? Now that's 1, 2, 3, 4 candles. It goes down. That's 4 minutes. So in 4 minutes, that was 138 pips. Now if you count the spread, which is 50, minus that 138, that's like 188. I'm sorry, 88. That's 88 pips you just made in profit real quick. That's based on this big move, but it doesn't happen that big all the time. It could be a real quick move, like from right here to right here. And it might reverse on you. Now you lost that trade because it didn't cover your spread. That was only 28 pips. It didn't keep going down, so that's a loss. 28, 50 is a spread. So if you put down like a penny on that, for an example, and that's still another 22 pips that you lost. So you lost 22 cents on that trade if you did 1 penny on that trade because you didn't even cover the spread cost. Maybe even more because I forgot about the commission. It all depends on which broker you're using. Every broker doesn't have commission, but they have higher spreads. All right? So, but to answer your question, scalping is just trying to get 1 pip, maybe 20 pips, maybe 5 pips here, 7 pips on this trade, 15 pips on this trade, 13 on this trade, 30 on this trade, whatever. Just trying to get what you can get. It's basically like it sounds, scalping. I'm
right, and you still
get whatever I can. You said what?
So scalping is profitable even with the commissions?
Yeah, scalping is profitable if you're looking at a profitable chart. Okay? I would not trade this right here. I wouldn't be trading this chart. It's too choppy. Like you see, it's not really moving a whole lot. I wouldn't be, now right here it moves crazy. All right? But right here, it wasn't really moving enough. Keep in mind you got to cover the spread. All right? If I look at this chart, and let's take this off. Turn these candles on. Okay? You want to look at a chart that has a whole lot of this. You see this right here? You see that movement?
Yeah, I see it.
You need that. If you don't have this, you don't trade that. You need to look at a different chart.
Okay.
All right? The reason why is because between right here at the top and right here at the bottom, that's 100 pips. That's enough to cover your spread and make a profit, right?
Yeah.
If you don't have that, don't trade it. But here's the thing. It's very, very risky. This is why I don't allow everybody to trade this, because they can't even follow basics of getting 50 pips and closing the trade. I say 50 pips and out, they'd be like, huh? Do I close it right now or do I close it later? It's a long-term trade or short-term trade. I said 50 pips and get out. When is it going to hit 50 pips? I don't control the market. When it hits 50 pips, that's when you get out. Do y'all understand that? That ain't more language, right? 50 pips, you get out.
Yeah, I understand that.
So with this right here, you can't say that, bro. I can't tell you, okay, do I close this trade? This is a 1 minute movement. This right here moves too fast. All right? This right here, bam. 1 minute, 2 minutes, 3 minutes, 4 minutes. Look, 12 minutes, 13 minutes later, it's already reversed. It reversed in 14 minutes. Completely. But how you know it's going to go all the way from here to here? You don't. You see, it went right here in reverse and came right down again. You don't know what's going to happen. So it's very, very important. If you're scalping, you should not do big amounts of money because you're going to blow your whole account trying to scalp.
Okay. Right.
Now, some folks can do it because they're willing to risk more money. Are you willing to risk that kind of money? Are you willing to risk a lot of big money? You know what I'm saying? Or are you going to follow your own trading parameters and do trades based on your account size? That's when people get in trouble. They start losing money and they start, saying that, oh, man, y'all told me to trade this and it did this and then this. And, well, how many pips did you lose? Man, I lost 300 pips.
Dang.
How you lose 300? We get these stories, bro. This ain't no lie. How you lose 300 pips? And, man, I didn't tell you when to trade it. You didn't tell you when to close it. We don't never tell you when to close a trade. Never. We don't never say that. 50 pips, that's when you close it in the profit. 25 pips, you should be automatically kicked out of the trade. Because you got a stop loss, right?
Evidently, if they lost 300, they didn't have that.
Exactly. So whose fault is that?
That's their fault.
That's their fault. But see, what it's going to come down to is, oh man, I didn't know that. We post this information in the group every trading day.
I mean, I see it. 50 pips out.
50 pips and get out, right? We make jokes about it. We make jokes about it.
So I mean,
do I hit 50 or do I hit 50? You know what I'm saying? I don't know how much more basic to make it. You know what I'm saying? That's why I tell everybody, look, I'm an uneducated brother. I'm uneducated when it comes to book smarts. I don't have any degrees now, and I know I know I can count to 50. All right, but this is also what I can do. If you did a 1 penny trade, okay? You do a 1 penny trade. Let's say the spread is 10 pips, and your commission is 10 pips. That's 20 pips, right?
Right.
All right. I'm not talking about those pips. I'm talking about 50 pips in the profit. So maybe a total of 70 pips on the trade for 50 pips in the profit. So if you get if your penny goes to 50 cents, you close it. You shouldn't have to read how many pips it is. 1 penny times 50 is 50 cents, right? Right. So we ain't got to question that. You know that if you trade a dime, and when the dime goes to $5 in profit, you close the trade, right?
Right.
Mm-hmm.
Exactly. So it's not like something that I have to be saying back and forth. So when somebody says, man, I didn't win that trade, or they say, man, I didn't close it and it reversed, and y'all say 50 pips and out. 50 pips. See, when you say it and I say it, it's not like I ain't teaching it, or we're not teaching it. Okay?
Yeah.
You feel what I'm saying?
I understand completely.
But I want people to, if you don't get the basics, you're not going to get any of the advanced stuff. But I want you guys to get this, especially you, Clint, because you right here in my area. Oh, sorry, no, Kevin's here. Sorry, Kevin's in Raleigh, guys, by the way. Kevin's here in Raleigh. Well, he's in the service right now. He'll be back, next week?
Yeah, next Thursday.
Next Thursday, yeah. And, so I met Kevin on Instagram, but found out he was in Raleigh. I'm like, man, let's go meet at Starbucks. And he got with me back in what was that, December, bro?
Like January, February.
January, February, okay. Before he left out. Now he's gonna come back and he's ready to kill the game. So yeah, man. It's really not as difficult as people make it. And when you see this, I'm sorry, I'm gonna make sure I say this as well. And you can chime in if you want to, Alfred. I'm just just talking. You might hear us say, "Look for room to the left." Okay. Let me show you what that means. Here's a good example. Let me get a shape. Let me get a rectangle. Hold up. Where'd rectangle go? This is room to the left. Y'all see this? All this blue space is room to the left. Y'all see that?
Yeah.
Mm-hmm.
All right. Now, this candle right here went up. This candle right here went down. All right. This candle right here is 600 pips. Now, if you fake going up and you get people trapped on the buy side, and you go back the opposite way 600 points, why would you go back up and give away your money back to people? If you got $500 million trapped right here in this area, if you go back up there, you can give back to them. And you're working for a bank, and your manager's gonna be mad at you. Why would you go back? Why would you go back up there? You're not gonna do it, are you?
No.
Right. So when you see room to the left like this, it ain't coming back. If you're buying, you need to close your trade immediately because it's not coming back. This room to the left is telling us it's going to drop. And what did it do? It dropped. And it kept dropping. And this is where it's at right now. You follow me?
Yeah.
Yep.
Okay. So if you see reversal pattern, even if you would have got in after this candle was finished, right? If you would have gotten in right here, you would have went to the negative 200 pips. But if you know that it's not coming back up here no more, you might not set a take profit of 25 pips. You're gonna set your stop loss should be right here at the high. That's your stop loss right there. So you got in right here. You went into the negative 200 pips. You had 1 penny in there. That means you're negative $2.70. You got $100 in your account. That means you're down 2.5% basically of your account. That's not going to hurt your margin. It's not going to make you go bankrupt, is it?
No.
Right.
Nah.
Now you let it go all the way down here. You just made $8 on the penny.
Wow. 10 pennies in the dollars, literally, man. I love the sound of that, man.
For real, okay?
Like,
Now,
you know what I'm saying? Turning pennies to dollars, man.
now let's say that you got in more than one time. You might say, man, this is a very accurate trade, man. I'm gonna get in for a penny. That's 4 pennies. All right. So now if it went up to right here, and you got in for 4 cents, now you're down $8, but you're only down 8% of your account.
Right.
But you know that move was so aggressive, it ain't coming back. Now you get down to here, and it goes that 800 pips. And you got in for 4 pennies. Now you done made $40. I'm sorry. What's that? About $30. About $30, right? Am I mistaken?
Yeah, you're right.
But you made it off of pennies, guys. That's pennies. That's all based on how much you can invest in your account. That's what we talk about when we say room to the left. This is what room to the left means. Okay? But now look at this right here. Let me show you the reverse of that. Let's see. Look at this. That's also room to the left, isn't it? Y'all see that?
Yeah, I see it.
That's room to the left too. But, you know, it did make a quick trap move right here. It made a quick trap move, get people trapped down here, stayed around this area, and then pulled back. All right? So if you would have got in at, you know, there and waited and for it to come out, you still would have been up 300 pips from right there. It may retrace back and come to right here to this area, and then drop because it's not come back here for a minute. I don't see it come back here for a minute. What it may do is it may retrace. You'll hear say this is what retrace means. It's on a downtrend, but it's going to retrace back up. I don't think it's going to come back here though. I think it might come back like somewhere around here, in this big consolidation area right here. Because see, it consolidated right here. You see this? You look back in history to see what it did in history. See what it's going to do in the future. You learned that in history class, right?
Mm-hmm.
History repeats itself, okay? So if you look right here, it consolidated right here. Consolidated right here. So it may come back up here and do what? Consolidate. So that might be an exit point. I might say, okay, when it gets to like right up here, I'm going to go ahead and close my profit out. So from right here to right there, 700 pips. I'm going to close it. These are based on our predictions. Now, it may not go that high. It may go higher. It may come all the way to right here and then consolidate and drop back down. That's 1,300 pips. You don't know. But you can give some very, very educated guesses that may be 100% accurate. Y'all follow that?
Yep.
Yeah.
Any other questions?
I don't got no questions.
Any questions about anything that you just want to know? Period. That because we on this right here. So, you know, I got a little bit more time. So, my wife's on the phone. So, any questions at all, or anything you want me to pull up, Alfred? Like, just pull up a chart. You want me to look at?
Not really, man. I'm just looking to see what you got going on. But
Okay.
you look good to me.
I mean, you want me to look at something that you're looking at today? You want me to go pull up just to see if I see it too, or?
Go to the 4-hour chart.
On this?
Right here. Yeah, the 4-hour. And talk about that reversal right there on that room to the left joint.
Oh.
Where you can see it's going to, how you can tell it's going to retrace to around 55,600.
Right. That's where it just stayed at, consolidated. Okay, that's why you would draw a level. You see, if I put that line right there, you see how it bounces off where my line is. You see those candles that are bouncing off that line. It's right here in this area. You see it?
That's it.
It's bouncing off that line. That means there's a level right there. So you get this level line, and you put that level right below that candle. Bam, you got you a level. All right? That's how you draw your levels. Look back in history. Look. Bounce off over here. Okay? Good level right there. Okay?
And you really can tell that it's going to retrace by that reversal pattern you see right there.
This is a reversal pattern right here. Okay? So that's why it's very important to study the reversal pattern worksheet. This is a reversal pattern. That's telling you, okay, the market is reversing. So this is going to go back up. It's just not coming back up here. It ain't coming that far, but it's going to come back up. All right? That's an opportunity to make some money. But what I'm going to tell you all, starting out, a lot of times, we're not going to do, or I'm not going to call out any buys on a downward trend. I normally won't call that. You know, I'm going to call more sales than I'm going to call buys because it's on a downward trend. Does that make sense?
Yeah.
Not going to call a buy when it's on down. Now, you could make money on that uptrend, but you can also get trapped really fast and they can reverse real crazy. You know? But when you have experience with doing this and seeing these reversals, get in on one of these buys real quick, get some good pips, close your trade out because you know some keep going down, and get out. But that's going to come with experience. Definitely come with experience. But this chart right here, man, it's just whoo. Look at this chart today. This is my baby right here. EU is my baby. This is my baby. And AU is Alfred's baby. And I'm checking on my baby today. And it's just looking real good. Looking real good for this week, man. Hopefully everything just keeps flowing like it's been flowing. And we definitely gonna cash out. We're gonna cash out very nice. But yeah, any other questions? Like I said, just marking the chart up. You can just leave that there. You know, that's not gonna hurt anything by leaving that there. Okay. So you know, a lot of room to the left is very good. You got room to the left. You might be having a lot of bread come in. You got that much room. It's pretty accurate. Really accurate. You got that much room to the left. Look at all this room right here. Look at all that. Nothing but room right there. That's just so much room, man. So much room. And then, you know, it comes down, consolidates, goes down again, consolidates, goes down again, consolidates, makes a W, goes up, consolidates, and that's where it is right now. Actually, let me look at this again. So we look at history. Another thing, don't be afraid to zoom out. Look at the overall picture. Look what the market does. Upward trend, bouncing. Markets don't go just straight up or straight down. They move a whole lot. Don't be afraid to go back and zoom out and see the bigger picture. If you're watching baby picture, you see W's in the market. Here's a W right here. You see the W? W. You see that?
Flashlight.
No, do it look like I got a flashlight?
You see the M right here? This is an M. Look. Up, down, up, down. That's an M. W's, buys. M's are sells. Learn that at babypips.com. All right. Any other questions, guys? Just want to make sure we got some of these basics down, but don't be afraid to go up here and just, hit these buttons. I can't make you do it. You just have to do it. You got to draw. If you don't know how to draw your lines yet, watch the videos so you figure out how to draw. That's what they're there for. You do a one-on-one session, hit me up. They hit up Alfred all the time. His phone be blowing up. He always busy. Okay, but yeah. Any other questions, guys? Any questions? I fell asleep. All right. Never mind. Kev, you still hear me, Kev?
Yeah, I still hear you.
Okay, cool. Oh, it's nighttime over there. Okay, cool. All right. Yeah, man, that's it, guys. That's it, man. I'm about to eat me some ice cream. Don't say nothing, Alfred. Leave me alone. We just ate some wings. I got this bite taste in my mouth. I need something sweet right now. Yeah, that's it, guys. So, it's always a small amount of people on these calls, but the people who get on it, they learn. That's the most important thing. So.
Oh yeah.
All right. Well, we'll chat later. If you want to hit me up, you definitely can, bro. All right, Kev. Have a good night, man.
All right, you too.